Alright, my mic's a bit shit, you'll have to bear with me, but I'm going to mark up a trade I took last week from scratch with reference to this trade plan. Should be pretty decent. So it was a EU short last week. So obviously starting off at a higher time frame, what we look for. So I always have my like greater time frames in mind. So for example, obviously the daily and the weekly were very bearish. This overall bearish leg. Obviously in here we've began to flip bullish. We're now on a bullish leg. But what's happened in more like medium term price I'm more interested with. So we have a demand zone here that has swept and broke higher. We have engineered liquidity into the zone, broke higher, forming a bullish leg to the upside. But in more recent price, we have swept the swing high. We've lost the momentum we had previous. So we've took the high by a small margin, swept. Then here this has become a supply zone. We have failed to create a new high here and broke structure. That's the first indication that we're in a bearish trend. So obviously we're in a bearish leg to the downside, and then where are we in the leg? So we have liquidity under all these lows, and obviously we've been smashing through them, giving very small reactions. And what's happened in more recent price? This low here, in this whole leg to the upside, there's liquidity here, 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 and then of course there's small amounts under these lows, but realistically there's liquidity here and liquidity here. This is kind of the last point of liquidity until the swing low of this leg. Therefore, it's quite a significant point. So we should expect a reaction from this area, cool down, a correction to the upside. And what has happened? Just delete all this. What's actually happened? We have taken this low and broke back below again twice. We've wicked it. We've taken a low, with a little objection, gave a rally to the upside. And what did this rally do? Again, very marginal, but in this leg we have two liquidity points. One very, very minor, but this high, we have a small buy to sell, drop base drop. That acts as a minor liquidity point. So what actually happened here? We swept this major low, swept buy side liquidity, swept sell side liquidity, swept the low again, failing to create new high, then breaking back below. This tells me, this is an indication that this low, this sell side liquidity point, did not contain enough liquidity to rebalance price bullish as we broke back below. Therefore, I want to continue the bearish trend until more liquidity. Where's more liquidity? The next liquidity point is this wick. So let me, I was going to reference the trade plan. So I've separated into different layers how I look at price. So first off, establish H4 structure, which I just did. We're bearish and a bearish leg. Work out H4 EUF, which is again what I just did. The H4 EUF, as we have not respected a sell side liquidity point and failed to break to the upside, swept liquidity and broke back down. The EUF now is continuing to the downside, taking more sell side liquidity, like for example this low here, and identify strong and weak structure points and key liquidity levels. So in this leg now, we have the key liquidity level, which I previously mentioned, this sell side liquidity point, which again we've taken and not given as much reaction as expected, therefore forecasting bearish price. And if you look at the current leg we're in terms of strong and weak structure points, we have this high, which was the correction after the sweep of this liquidity, which swept the high and it's broke back to the downside. If we're looking at this price, this would be the stronger high as we've swept. I know it's marginal, I know it's not a key liquidity point, but it is a liquidity point. We broke back to the downside. And I'd see this point here as a nice liquidity point, which we should take before returning to the downside. And again, it's easy to say after prices happen, but we were in this trade live. So we were forecasting this before it happened. And so yeah, that's essentially layer one. Then layer 2 is still on the 4 hour. Layer 2, I dropped to the 15 minute. So I'll play price back so we can um, do this live. But what do we have on the 15 minute? So first off, my first thing I do when I go down to the 15, identify current 15-minute order flow. So the order flow, we're bearish, bearish. There's nothing bullish about this. Current 15-minute order flow is bearish. Even in this retracement leg here, to change order flow, we have to chalk, which we've done, then sweep to the downside and boss. No sweeps, no major bosses either. So we're still, everything's bearish order flow wise. Wait for order flow to live current H4 EUF, which already is also bearish. Mark out key liquidity zones and POIs that align with order flow. So, as I mentioned on the 4 hour, where are the key liquidity zones and POIs? So we have this supply zone here, which has swept this H4 liquidity point and broke to the downside. Therefore, this will become a POI. It's actually a mitigation of this wick, so it would be here to here. And it doesn't actually, it does sweep, but the POI itself is a mitigation of the sweep, so we sweep, mitigate, then drop, so this POI doesn't actually class as a sweep POI. Again, it's still significant, so we're using a 5M model anyway, because prices ran so far from the POI, and it's quite big, but I wouldn't actually class that as a direct POI sweep. Then we have liquidity levels again. This zone here is a big draw on liquidity, a big essentially inducement of early sellers. So we have this zone here, which is the sweep and the break. So what price has done, we have reacted from this larger sell side liquidity, pushed up, swept buy side, and here a lot of orders have been used to push price higher to sweep liquidity. A lot of stop loss has been triggered of sellers, early sellers. Then we push price to the downside. So here lies a large volume of sell positions, or just a large volume of orders in general. Therefore, there's a higher chance of this area will get mitigated and pushed to the downside. But again, to rebalance the market so we can take people out. So for example, early sellers, they see us putting up, they see us pushing down. They're selling. Where their stop loss is gonna be? The nearest structure point, which is here. So it's gonna be a large one with stop losses above this high. And what happens when banks put price above this level? They trigger the stop losses. They trigger the stop loss of these trades. They take them out of the positions, and what happens here? Every time you hit take profit or stop, an equal and opposite transaction will occur. So obviously, if you're selling, you're essentially lending, buying, and buying back at take profit. But if you hit your stop loss, what are you doing? You're lending and you're buying back at a loss. So what's happening is all these sellers, early sellers that are getting stopped out, they're executing a large amount of buy orders at this level here because they're getting stopped out and their sales going into buys to take them out of the transaction, take them out of their position. So there's a lot of buy orders and buy volume happening here. So this then gives banks an excuse to rebalance price, because price cannot just move up or down. It there has to be a relatively equal amount of buys and sells either side of the market. So if banks want to take price to the downside, which we're anticipating they do, then it has to manipulate retail into creating a lot of buy volume, so then they can sell into the buys to rebalance the market and take it in a desired direction. So this is our liquidity point, resting below the supply zone. Order flow still bearish, you take it. So here we are eligible for a 5M model. So again, just going back to the plan. So I've waited for order flow to align. I already had a line marked out key liquidity zones and POI. So that's POI liquidity. EOF is to continue to the downside and take out this low, sell side liquidity. Then wait for price to suit liquidity at your zone, so which we just swept here. Now we have two options here: the 1M or the 5M model. This POI, so with the 1M, it needs to follow pretty strict criteria, and this doesn't, because the POI firstly is too big. POI is to be 10 pips and below. There needs to be a direct POI sweep, which it isn't here, it sweeps, but the actual POI is a mitigation of the sweep, so it doesn't sweep. I can't use the 1M for that reason also. And we want a direct pullback to use the 1M. So for example, I want price to do this, not this. I want it to be the initial pullback. So after we create liquidity, I want to take liquidity straight away, then drop to use the 1M. Because you want a large time frame confirmation when prices ran so far away from the zone. You want to see like a decent time frame flip. So for those reasons, we're going to use the 5M model. We take this high here. So we drop to the 5M. Now what is the 5M model? You want a 5-minute chalk, which we get actually here. Here is a we push up, opposite candle, then continuation candle. It's just a bullish order flow range. Then when we take the low here, it's a 5-minute chalk. So this is our 5M chalk. Now to enter, we need 5M liquidity. Any sell side liquidity on a 5-minute, which we get here. So we push up, give a large volume of wicks before pushing to the downside. This is a pool of sell side liquidity, which we would set our entry on. So this would be our entry, stop above the chalk high, entry on the liquidity, and then TP the EUF of the sell side liquidity to continue the bearish trend. Then that'll be our trade. You run away, get tapped in. Maybe sweep one more time, and then we run nicely to the downside. Intake profit for a nice 7.5 hour. So a very nice trade. That's an example of a pro order flow continuation. So it's essentially a trade scenario. We're following the 4-hour EUF, but it's pro order flow. So it's obviously been bearish for a long period of time. It's pro 4-hour and 15-minute order flow, and yeah, it's continuing the trend. Again, a very nice CP. That's on the 4-hour. Again, pretty simple trade, but very nice. Nice. I hope that was useful.